All right, Mike, thank you. The new year means new resolutions, and in addition to losing weight, financial resolutions are always popular ones. And experts say this is the perfect time of year to put your personal finances first. And this morning we're sharing what you need to do to get back on track. Here to help out, Chris Bridges, financial consultant and founder of the website Living on Top. Good morning.
Good morning.
Thank you for coming in. This is such an important topic because it's sort of that resolution. Okay, I got to get back on track here. And first off, you say really just make the commitment. But how do you do that? It's just like any other resolution. How do you really make the commitment and stick with it?
Well, I think you have to just do it. You know, Nike says just do it. And a lot of times if we want better, if we want to go into 2015 having, better control of our finances, we just have to commit to that process and whatever it takes to make it happen.
So what's the first step in doing that? What in getting to your financial goals? What do you start small? Do you start big? Like by the end of the year, I want to have no credit card debt. What do you start with?
That's a really good question because I think goals are great and you have to write them down, right? You have to really have something, but they also should be attainable. And when we look at the whole year, I want to do whatever it is in 2015. Sometimes we miss the opportunities to really reach those goals. So how about if we just start off with the first quarter? Okay. What do you want to accomplish in the first 3 months? And then because that's a little bit smaller, to make it so you can make it attainable and you can actually reach it, and then it'll motivate you to keep going. A lot of times we set these goals and then we don't achieve them, so we're not motivated.
What is something manageable, do you think, to set your mind to for the first quarter?
I would say first, let's get kind of control of your finances and look at your credit. So maybe the first goal is to get your credit report. Okay. Get your credit report, look at it, and then from there be able to determine, am I overextended in certain areas? Who do I owe? And then so once you have that credit report, that's your roadmap. And then from there, you can set up a goal. Maybe it is to pay down credit card debt that you've just spent from the holiday.
Holidays, right?
Or maybe saving more. Maybe you want to save more money in 2015. So instead of saying I want to save $100,000 in the year, maybe I want to save $1,000 and just make it a smaller amount so that you can reach those goals.
You also say to create a budget and a debt plan. And,
absolutely.
Do you really need someone to help you out in that area, or are there programs out there to help you come up with a budget? Because I think so many people just have a hard time doing that.
Right. Well, it depends. If you have a hard time with it, then you probably, should seek some help. And there are a lot of free tools on, the internet that you can look at. I mean, a lot of times also the banks. A lot of our banks have budgeting tools that are, attached to our accounts. And so you don't have to go too far. That might be a great way to start because you can use a tool that's manageable and you can manage your accounts at the same time. So you might as well go ahead and look at something that's attached at the banks.
Okay. Speaking of debt that we were talking about, the holiday spending, what specifically should you start out with when it comes to attacking credit card debt? Again, something manageable, but to really get the debt down.
Well, the first thing I would look at for credit card debt, that's a big topic obviously now because we're coming out of the holiday. We've probably spent more than we need to, but it's okay. We can get control of it. So the first thing to do would be to look at the credit card balances. Make sure that you're actually paying on your credit cards earlier in the cycle.
Why does that matter?
Because credit card interest is based on average daily balance. So if we pay our payments earlier in the cycle, we're cutting out a lot of that interest. So we can have more go to principal. So a lot of times we'll wait until the due date and then we may pay a little bit extra, but a lot of that is going to interest. Wow, so if we pay it earlier, we're able to get a lot of that paid off and interest.
How much far in advance? Like,
as earlier as in the cycle as possible. Okay. So if your billing cycle starts whatever day of the month, try to adjust your payment schedules and your budget, and pay it a little bit earlier.
Okay. And also you say to maintain balances less than a third of the limit or 30%.
That's huge, Sarah, because from a credit perspective, that's 30% of how your score is calculated. Oh. And so if you can manage your credit card balances, always keep them 30% or a third, whatever's easier to calculate, and keep those balances below that number. That will help you get as much of that 30% back on your credit score. So it's great. It's a great way to manage your credit card balances and your credit score as well.
And real quickly, I've always wondered this. I've heard different things about it, but if you have multiple credit cards and there's one which one do you start with? Do you try to pay off the one that has the lowest balance first, or do you start with the one that has the higher balance and really try to pay that one down?
Well, I would say, if you've got different balances, start with the ones with the lower balances, because you can knock them out sooner. Now, if they're all about the same, then of course we want to attack the ones with the higher interest rates. So it really depends on the type of accounts and what the balances are that you're carrying. Okay. So if you can knock it out earlier, pay the lower balance. If not, pay the higher interest.
All right, here we go. That's our goal for the new year.
Absolutely.
Chris Bridges, thank you so much. We appreciate you coming in today.